The recent publication, Africans Investing in Africa, which you co-edited, speaks about the growing trend of Africans investing in Africa. If we take a step back, what are some of those drivers?
It's mainly to do with the fact that there is more wealth being generated by the private sector in Africa, as well as the feeling that in the past Africa was not seen as a destination either going to be secure as an investment or had high returns on the investment. And I think now both those are changing.
Could we see this as some kind of indicator that Africa will rely less on its resources?
Well, I think the economics show that Africa is still very dependent on its resources, and partly the growth in Africa can be explained by the increase in demand for commodities and the growth in the rise of the cost of commodities, especially with the growth of China. And also, I think that you find now that there are a lot more multinational companies who are willing to make productive investments rather than investments in the stock exchanges, etc. in Africa. If you look at DHL guarantees that they'll do overnight deliveries. So once their clients go into Africa, then they also need to invest in Africa and invest in the service sector and the service industries, mainly in transport in Africa as well.
If we look back at some of the investments that have been happening, are there any sectors which are specific or attracting more investment than others?
Some of the fast-moving consumer goods investments, and that's really a lot to do with intra-African investment in South Africa. So it's very ShopRite, Checkers, Pep, those kinds of companies are investing into the rest of Africa, and they're being quite aggressive in the way that they invest. They are not getting it all their own way, but there are certainly those kinds of investments. There's also investments taking place in aviation. South African Airways has tried to invest in other aviation industry or airlines. Ethiopian Airlines have invested in other areas. So there are investments taking place in those areas. Banking is a big one. Services, I mean, quite a lot of banking taking place in the region. But there's also a lot of investment taking place in services and ICT and the use of ICT, which then allows countries to leapfrog technology, and so suddenly there's investment opportunities that probably weren't there in before the technology changes that have taken place. For example, the film industry in Nigeria.
The narrative has been South African companies going into East Africa, West Africa and so on, but we are seeing more intra between regions, say West Africa or East Africa. How much of a percentage is that relative to South African companies investing in the rest of the continent?
I would say that there are major investments coming out of West Africa, I mean Dangote and companies like that, and there's also quite a lot of investment from East Africa into, at the moment, mainly other East African countries, but they are also looking to move out. Nakumatt has taken a major investment in East Africa, which has kept out pretty largely some of the South African investors.
We are seeing a lot of investment into infrastructure and logistics.
Well, yes, but the infrastructure investment is far behind what is required. When you look at the transport infrastructure, I mean, roads are still pretty much a public good. Railways, we're still sort of back in the 18th century, or even rather 19th century, in terms of service provision. In ports, if you look at the container depots, then there is a lot of investment, and DP World has invested quite heavily, as well as other companies. Airlines, there's a huge amount of investment taking place in aircraft and new airports, etc. But most of that is public sector investment rather than private sector investment.
Mark, historically, one of the constraints or hindrances to intra-African trade has been the cultural and value perception of different brands from different markets that are unknown, and there's a trust deficit that exists between that. How much is that being addressed, and how much is still pertinent?
There is quite some difficulty in being able to break into new markets with new brands, and there is that either brand loyalty or a feeling that anything that comes out of Africa is superior to what is made in Africa. I mean, if you look at the shoe industry, for example, I mean, you get really good shoes made in Africa, but someone would still prefer to buy their shoes from Europe, Italian shoes or shoes coming out of the UK, whereas those shoes are actually made in Africa, most of them, and then go to Europe and come back again. But there is a number of those barriers to break down and to try and get across to the fact that African brands, African products are maybe even superior to brands which come out of other areas.